Welcome to the Nifty Noon podcast. Today, we're doing a special deep dive into some really seismic shifts in the crypto market recently.
That's right. We're taking insights straight from our Nifty Noon newsletters to connect the dots for you.
Our mission is really to give you that shortcut, help you understand the complex forces at play without having to read everything yourself.
Exactly. We'll be unpacking major moves in crypto stocks, Bitcoin treasury strategies which are changing, plus some groundbreaking stablecoin news, and big institutional stuff like IPOs.
Yeah, we want to help you see that bigger picture, understand the nuances.
Absolutely.
We've got some fascinating, sometimes surprising things to cover. I mean, think about MetaMask launching its own stablecoin and China potentially jumping into the stablecoin game.
Right. After everything.
And MicroStrategy reversing a key policy. These aren't just headlines, are they? They signal a maturing but, still pretty volatile digital asset world.
Definitely maturing, definitely volatile.
So let's jump right in.
Let's do it.
Okay, let's start with the market. August 20th. That was a tough day for crypto-related equities. Bitcoin, for instance, it took a noticeable hit, falling to the $113,000 level.
Yeah.
What exactly drove that dip? And, what's that tell us about investor caution right now?
Well, what's really fascinating here is the clear risk-off sentiment we saw that day. It wasn't necessarily like crypto-specific panic.
Okay.
It seems driven much more by broader financial market caution. Specifically, everyone was looking ahead to Fed Chair Jerome Powell's speech.
The Powell speech. Okay.
Exactly. So for you, this really underscores how sensitive crypto markets still are to macro sentiment and, well, what the Fed does or says.
So that whole decoupling narrative,
Yeah.
maybe not quite there yet.
It raises that exact question, doesn't it? How much is crypto truly decoupled? Or are its fortunes still pretty tied to the wider economy, things like interest rates, inflation fears?
Yeah, I see the logic. Our newsletter highlighted that the big players really felt the pain that day. MicroStrategy, MSTR, obviously the biggest corporate Bitcoin holder.
Yeah.
They fell, 7.8%, lowest price in 4 months.
Ouch.
But it wasn't just them. We saw declines pretty much across the board. Exchanges like Coinbase, Robinhood,
Right, yeah.
digital asset firms like Galaxy, even the miners like MRA.
Mm-hmm.
And interestingly, even companies holding Ethereum and Solana treasuries saw big drops. It was really widespread.
It really was. The impact was quite uniform across the sector, which is telling.
So what's the bigger picture takeaway from that?
Well, if we connect the dots, it suggests that even with all the growth and institutional buy-in we've seen in crypto, these external macro pressures, central banks, global financial sentiment, they still play a huge role in investor appetite.
Right.
That Powell speech was looming large. Everyone was watching for clues about monetary policy, and that directly impacts how people see volatility for assets like crypto.
So people were just getting cautious, selling off riskier assets.
That's what it looks like. Investors were clearly repositioning themselves ahead of potential news. It's a stark reminder, really, of how interconnected everything still is.
And speaking of that, our newsletter also picked up on a trend and made a pretty bold statement. Is the crypto treasury company craze already fading? Premiums to NAV compressing, short sellers are piling up.
Yeah, that's quite an observation.
What does that imply for companies like MicroStrategy holding all that Bitcoin?
Well, it's a critical insight, especially for you if you're watching this space. It suggests that maybe the initial hype, where companies could issue stock way above the value of their Bitcoin, that MNAV metric.
The MicroStrategy net asset value, right?
Exactly, the MNAV.
Yeah.
That premium seems to be shrinking. The market might be valuing their stock closer to the actual crypto they hold.
Which makes their core strategy less effective.
Potentially, yeah. It reduces that arbitrage opportunity, makes it less attractive for raising new capital just by issuing stock, and the rise of short sellers. That signals growing skepticism that those big premiums are sustainable. It points to a more mature, maybe more challenging phase of that whole business model.
Okay, let's shift gears slightly. Just a day before that market dip, August 19th, Michael Saylor's MicroStrategy made a pretty significant U-turn on its stock dilution promise.
Ah, yes, that was big news.
What exactly changed, and why is this so noteworthy? Not just for them, but maybe for the whole sector.
It's a really key insight into how even, let's say, the most committed companies have to adapt when the market shifts, especially when their main strategy hits turbulence.
So what was the old promise?
They previously committed not to issue new stock if their shares traded below 2.5 times their Bitcoin holdings, that M&AD premium we talked about,
Okay.
with exceptions only for things like debt or dividend payments. But now they've added a new clause. It lets them sell shares below that 2.5x threshold when otherwise deemed advantageous to the company.
Advantageous. That sounds like flexibility.
It's ever giving themselves more wiggle room, more flexibility, and it reflects those changing market conditions we just discussed. Maybe a recognition that the old funding model wasn't working as smoothly.
Right. And our newsletter pointed out this change came after a period where their Bitcoin purchases were getting smaller and that premium over their crypto assets had shrunk quite a bit, down to around 1.62x recently.
Precisely.
So this isn't just MicroStrategy tweaking things. Is it a bigger signal about the whole corporate Bitcoin treasury idea?
I think it could be. For you, this move suggests that maybe that era of easily using inflated stock prices to stack Bitcoin is, well, perhaps closing, or at least getting tougher.
So what does that mean going forward?
It might force a reevaluation. Are these companies pure Bitcoin believers accumulating no matter what, or are they adapting opportunistically? And what does that mean for their long-term value? Maybe future corporate buys will rely more on traditional financing or just internal cash flow.
Which could slow things down.
Could slow down that specific institutional adoption narrative, yeah. But it's important to note, despite this tactical shift, their core mission seems unchanged. Stack Bitcoin. Oh, yeah. Our newsletter noted they added another 430 Bitcoin just last week, about $51.4 million worth. Their total holdings are now around $72 billion.
Wow. Okay, and it wasn't just MicroStrategy making moves. Our newsletter also highlighted other significant institutional buys around then, right? Suggesting maybe different approaches.
Absolutely. We saw MetaPlanet, for instance, adding another 775 BTC. They're up to nearly 19,000 BTC now.
Significant.
And then you had Norges Bank Investment Management, Norway's sovereign wealth fund, apparently doubling down on Bitcoin. Plus, Abu Dhabi's Mubadala Investment revealed holding over $500 million in IBIT, the BlackRock Bitcoin ETF, according to SEC filings.
So we've got direct buying, ETF buying. It's not one size fits all.
Exactly. It tells us institutions are definitely getting into Bitcoin, but they're not all following the Saylor playbook. Strategy shift shows the challenges of that aggressive stock model.
While others like MetaPlanet keep buying direct.
Right. And Norges Bank, Mubadala, they're using the more traditional regulated ETF route. For you, this signals Bitcoin isn't fringe anymore. It's a legit, if volatile, part of institutional portfolios.
But the how is diversifying.
Precisely. As the market matures, as regulatory clarity improves, you get different ways in, different risk profiles.
Okay, now, this next development really grabbed my attention. August 21st reports, China, considering authorizing yuan-backed stablecoins.
Yeah, that one made waves.
After their 2021 crypto bans, this feels almost unbelievable, like a complete policy U-turn. What could be driving this, and how huge is this potentially for global finance?
It is monumental, and you're right, almost unbelievable given their history. This looks like a very strategic, very calculated response to the U.S. pushing to regulate dollar-pegged stablecoins.
Ah, a geopolitical angle.
Absolutely. Connects directly to the bigger picture.
China.
Wanting to boost the yuan's role globally. Right now, the dollar dominates trade, finance, and nearly 98% of the stablecoin market.
So this is their digital countermove.
It looks like it. A yuan-backed stablecoin could introduce serious competition, reshape global financial dynamics. The plan apparently involves Hong Kong and Shanghai as key hubs, using Hong Kong's new stablecoin rules.
Wow. So for you, the listener, the big question is how this geopolitical chess game in digital currency might reshape everything.
Exactly. It's potentially a move to project soft power, economic influence, through a digital currency. It's way bigger than just crypto.
Okay, so China might be getting in. And then almost immediately, August 22nd, another huge stablecoin announcement. MetaMask launching its own mUSD.
Yes, from one of the biggest self-custodial wallets out there.
What's the implication when a platform like MetaMask enters the stablecoin space, especially right now?
It's huge. MetaMask USD, or mUSD, launching later this year. It makes MetaMask the first major self-custody wallet with its own native stablecoin.
And how's it structured?
They're partnering with Stripe-owned Bridge for issuance, M0 for the blockchain tech underneath. It'll be fully backed one-to-one by U.S. cash and short-term treasuries.
Safe assets.
Yep. Initially on Ethereum and Linea, which is Consensus's own Layer 2 network, this whole move just signals a massive push for deeper integration, better user experience in Web3, making crypto easier for their millions of users.
Yeah, our newsletter said the main goal for mUSD is exactly that. Seamless integration. Reduce friction for users doing everyday things like on-ramping fiat, swapping tokens, bridging assets, all within MetaMask.
Makes sense. Keep users in the ecosystem.
And it doesn't stop online. They plan to link it to the physical world by year-end with the MetaMask card, spending at MasterCard merchants.
Bridging TradFi and DeFi.
And this is all happening as regulatory clarity seems to be improving in the U.S., with things like the Genius Act for stablecoins providing more certainty.
Right. The timing isn't accidental.
Yeah.
Better regulatory environment definitely helps spur this kind of innovation.
So MetaMask entering, China may be entering. What's the overall trend here with stablecoins?
It highlights a critical trend. Stablecoins are fast becoming a foundational layer for the Web3 economy. They simplify things for users, bridge to traditional finance.
But it's more than just utility now.
Absolutely. They're becoming a battleground for user experience, like MetaMask, but also potentially for digital currency supremacy, like the US dollar versus the potential digital yuan.
And we've seen other moves too, right?
Oh, yeah. Wyoming launched its Frontier stable token. Tether appointed a strategic advisor. Bullish settled IPO proceeds in stablecoins. Coinbase added support for another one, USD1. It's just intense activity and innovation everywhere in this space.
So for you listening, stablecoins aren't just some crypto niche anymore.
Not at all. They're evolving into a core piece of global financial infrastructure. Watch this space very closely.
Okay, let's turn to another big institutional signpost. August 18th, Gemini, the Winklevoss exchange, filed for a Nasdaq IPO.
Another one heading for the public markets.
Right, following companies like Bullish, Circle. So what does this tell us about the industry maturing, especially when you dig into the details of their S1 filing?
Well, it definitely signals that broader trend. Digital asset firms wanting access to traditional capital markets. It's a clear step towards mainstream acceptance, financial integration.
And getting big banks involved helps. Goldman Sachs, Citigroup, Morgan Stanley backing it.
That adds a layer of institutional validation for sure. However, the S1 filing wasn't all rosy.
Oh.
It showed revenue decreased and net losses increased substantially in the first half of 2025 compared to 2024.
Not ideal heading into an IPO.
Not ideal.
Huh.
And significantly, it detailed a big structural reorganization. They're moving most users to a Florida-based entity called Moonbase.
Moonbase. Why?
Almost certainly to navigate New York's stricter regulatory environment, finding more favorable operating conditions. It's a strategic regulatory move.
So it's kind of a mixed bag then. Progress towards the mainstream, but also financial headwinds and regulatory maneuvering.
Exactly. It's a mixed bag. The push to go public is a strong indicator of integration, paving the way for others.
But I guess given those challenges, is it really a sign of a robust industry maturing, or maybe one still dealing with some significant growing pains?
That's precisely the important question for you to think about. It really reflects both things happening at once. The undeniable growth, the ability to go public with TradFi backing, that's immense progress.
Shows they're willing to play by traditional rules.
Which is key for wider adoption. But on the other hand, the financial struggles, the need to restructure to avoid certain regulations, that highlights the path isn't smooth.
Oh, they're adapting.
They're adapting, sometimes quite aggressively, to find sustainable growth models within these evolving, often patchwork regulatory landscapes.
Yeah.
It shows growth and the hurdles still ahead.
Okay, just to ground us with some numbers from that period, our nifty noon updates showed Bitcoin sort of hovering around $112,000 to $115,000.
Yeah, finding some support there.
Ethereum was around $4,100 to $4,300, Solana in the $178, $185 range. Lots of daily fluctuations, obviously, but do these ranges tell us anything beyond just the numbers?
Well, they're not just random numbers. Bitcoin finding support in that 112K, 115 Gaia zone, even after that dip we discussed, suggests pretty strong buying interest there.
A potential floor.
For you, it could suggest a floor, maybe reflecting conviction from long-term holders or institutions buying the dip. Ethereum holding over $4K, Solana and its range, that suggests these major alts have underlying strength.
Network utility, ecosystem growth.
Possibly. Things that aren't entirely tied to Bitcoin's daily mood swings. It points to some resilience. But the fluctuations also just hammer home that volatility is still the name of the game. These levels are key battlegrounds for bulls and bears.
Got it. And quickly, the NFT world during this time. Our snapshot showed CryptoPunks still dominating top sales, right? Several going for 50, 80 ETH each.
Yep, the punks holding strong.
But we also saw interesting daily swings. Collections like Mockaverse having good days, while others like Bitcoin Puppets, Milady Maker saw dips. Still very active, very dynamic.
Definitely.
What's the insight there? How some collections hold up differently during market shifts?
What's really insightful about NFTs right now, even with broader crypto volatility, is that resilience and differentiation we're seeing, those consistent high-value punk sales, that suggests a flight to perceived quality historical significance. Blue chips.
Like traditional art markets.
Kind of, yeah.
Yeah.
For you, it points to a maturing segment where things like provenance, community, scarcity are becoming key value drivers. But then newer or maybe more speculative collections.
Like Bitcoin puppets or Milady.
Right. They seem more susceptible to overall market sentiment. They dip quicker when caution rises. It indicates a tiered market is forming. Some NFTs seen as maybe long-term value stores, cultural pieces, others still very much speculative plays.
Fascinating look into collector psychology there.
It really is. And digital asset valuation evolving.
Wow. Okay, what a deep dive we've had. We've covered, well, everything from macro impacts, microstrategies, tactical shifts.
The emerging stablecoin wars.
Yeah, between nations and platforms.
Yeah.
And Gemini marching towards public markets. It's just clear the crypto landscape is evolving at breakneck speed.
It really is. And traditional finance, geopolitics, they're playing much bigger roles now.
So what's the key takeaway from all this?
I think the key takeaway is that undeniable increasing interplay between TradFi, global geopolitics, and this decentralized innovation. The future here isn't just about the tech anymore.
It's about regulation, national strategies.
Exactly. Regulation, national strategies, how adaptable the major players are. For you, it means understanding crypto now requires a much, much broader lens than maybe it did a few years ago.
Which leads to a final thought for people to consider.
Yeah, a question for you to mull over. As stablecoins become more diverse, more geopolitically charged, how might that alter your perception of currency, of digital payments, maybe even things like national sovereignty in the years ahead?
Lots to think about there. Thank you for joining us on this deep dive into the latest in crypto. We really hope you feel a bit more informed, maybe inspired to dig deeper yourself.
Hope it was useful.
And for more daily insights, updates just like these, be sure to follow Nifty Noon on X and subscribe to our newsletter. We're always diving deep into the most important stories shaping the digital asset world.